Hello, welcome to another Closing Bell with me, Charlie Orman, joined by Chief Trader here at Fat Tail Investment Research, Murray. G'day, Murray.
G'day, Charlie, and hello, everyone.
Hello, everyone. Hello, everyone. It's been a shaky week for the markets. We're going to be covering a lot of that. Big turmoil in the US that spilled over to ASX, especially some of the smaller names. So we'll touch on some of the big names, especially the big tech that's fallen off. We'll look briefly at the USDX. I think there's some interesting moves there. The requests from some of you readers from last week, thank you for your comments. We'll cover natural gas and some things in between. There's been a lot of movements, a lot of fear in the markets.
It's been brutal. Let's face it, It has been brutal out there. I love when the market is just toddling along, going up every day after day, and everyone thinks it's so easy to make money trading markets. And I've just made another 50% doing this. And all of a sudden, you get a big face slap from the market saying, well, actually, it's not as easy as you think it is.
Yeah,
retail. And that's sort of what we're getting is a big unwinding of some of the hottest trades. So it's a real profit-taking that's been quite brutal in the last few weeks. It really has, a lot of heat has come out of a lot of this stuff. Arafura is one that really jumps, and Linus even, the rare earth thing. I guess people thinking that the China and US are now best buddies, and so it's all fine and dandy, but things got too hot. Things were just running so hard. And boy, have we come back to earth recently. And even in the US, we're going to show people some of those very hot stocks really coming off the ball rapidly.
That's exactly what I was going to say. Especially you see where all the popular retail traders have been going in the US tech. Those are some of the hardest hit recently. It's been if we zoom out from just this last week of the turns, the earnings reports weren't that bad. It was pretty good in the grand scheme of things. I think it was something near 80% were showing, positive earnings. But in the reality, the CapEx spend, the concerns of valuations.
Well, I think that Meta one is the first sort of canary in the coal mine of the AI capital spending. Yeah. And boy, is it ever going to actually turn a profit.
Yeah, but like the rare earths, we did warn you guys on the way up. We warned you just before the way down. We talked about getting some profits. Similarly, last week, you warned about some perturbations within the market, right?
Yes,
some risks.
The breadth was looking a little bit shaky. So I was certainly looking at that and thinking, gee, it's a bit weird that the S&P's right at its all-time high and nearly 50% of companies are trading below the 200-day moving average. It's like, as we know, it's very confined to the Magnificent Seven and that sort of thing. So they just have been powering, but really beneath the surface, it hasn't been that awesome. And because I'm trading the International Stock Trader now, which you should be a member of, I've noticed with my watch lists that I've just sort of seen a lot of red every morning when I wake up. I go, boy, that's 80% of the stocks that I'm got an eye on are down, even though the market's up another 20 points or whatever. So it looks like the market's going up on the indexes, but everything has been going down for weeks. So it's been a bit weird, and I've been caught in a few. I mean, I'm certainly no genius that picks everything. Boy, the last few weeks has been a couple of stinkers where some stocks have just reversed so rapidly, and the selling has hit so quickly that it's just one of those moments which come along every now and again. You've got to have your wits about you, because sometimes it can just go like that, and you got to be prepared for anything. So what I've got up here is just an example of what we were talking about last week.
So this is the market breadth again.
Yes, this is the market breadth again, and this is looking at the Nasdaq. So we're looking at the Nasdaq since 2016. Obviously, beautiful, strong rally in the Nasdaq, non-stop going up.
Right. Just for clarification, so the bottom is showing the 20-day moving average, and that middle line
200-day moving average.
Sorry, 200
yes. Days. So the number of stocks above their 200-day moving average. So here it's got 50%. So at this line, the black line is 50. So this is saying, 50, 60, 80% of stocks are trading above their 200-day moving average at this point. So that's like a really strong market, isn't it? And you can see that it's held there for a long time, and this is a really strong, solid trend that lasted for a year. That was that massive run from 2021 to 2022.
That's pure COVID liquidity right there.
Yeah, you can see it standing out, right? That you can see how strong that market is. Now let's compare it to the rally that we've just had here, right? So we had that correction, everything falling way below. a lot of stocks not trading well. And this whole rally that we've had has really just poked its nose above and is actually just on the edge of turning down below 50% again. Now, there's no sign that the market's about to fall over. This is not an indicator that I would say is something that I would trade off massively. You can see that there's moments when it just kicks back and forth for a while as the market was recovering out of that bad period. The market was trying to work out which way it's going. Some stocks are going well, some aren't. So it's certainly not an indicator that I go, that is now saying market's about to get hammered. But it is interesting that we're right at the all-time highs, things looking fabulous, and it's about to kick back under that 50% again. So you can see here, there was a nice rally that went on there for quite a while. You can see it sort of held above that whole time. And then it kicked below that 50% there, which was pretty early in that little correction. And also just notice, kicked below there. That was quite early in this big correction that lasted for quite a while. Kicked below here. Wasn't much of a correction, was it? And all of a sudden it took off again. Kicked below 50 there. And it was a bit of a correction for a while, but then turned up again. And you can see it holding above 50 all the way through here. 2016 to 2018, and look at that beautiful, nice, strong rally. So when it is holding above the 50, you can feel pretty confident. When it goes under 50, it doesn't necessarily say it's sell. It's just saying, oh, what's going on here? Why is there so many stocks that aren't really joining in the rally?
It's one data point in a constellation of things, I guess.
What I'm saying. So, but for me, I've just been noticing it recently, and it's been continuing. And this week we did see follow through after I mentioned it last week. There was quite a bit of selling, and these stocks that we've been watching, you and I talking about Palantir, for example.
I mean, any one of the Meta, Palantir, whatever you like to show. Let's start with Palantir because that's my personal pet peeve. So just to read off the valuations, because this stock, I mean, if you ask the average person on the street, what does Palantir do? No one has any idea, right? It's like, oh, they work with data, blah, blah, blah.
With the government, something.
Essentially, they survive off massive defense government contracts. They are huge, but let's look at their valuations. So their PE last week, before the rollover, was 600. Now it's 405.
600. Take note of that. A PE of 600.
Its price versus book value, 63. Its EV versus sales, 113.
Enterprise value to sales, 113. That makes insanity. No sense.
So it's pure insanity. So there you go. So it's now down 16% in the last.
Unless their earnings are growing at 200% a year or something,
they're not.
It's just unbelievable. And we had this Michael Burry coming out and saying...
Michael Burry, yep, the famous guy from The Big Short. Anyone's read that or seen the movie? It's a great one.
Yeah, good movie.
So he's come back with his Cassandra. So if you're on Twitter or X, whatever it's called these days, check out Cassandra. So he's on there. He is, the classic perma bear. He's come back out of the woodworks. He's called what? One out of the last 20 calls he's made has been big. Correct, sorry, but it was a big one.
Yeah.
But no, he certainly made a large bet against Nvidia and Palantir.
And there might be a bit of follow-through selling from other people on the back of that. So maybe it's a short-lived sort of everyone jumping on his trade. Because what he does is put a big trade on and then go and advertise to everyone to try to get everyone to go his way.
Absolutely.
Right? To get him in the money.
Is another one that does the same thing. All these big research companies do that.
Yeah, do it and then come out with the big bearish statement.
I mean, that wasn't what turned down the market this week. I mean, we saw profit taking on Monday. People bought the dip. Tuesday seemed okay, and then Wednesday was down again. I think the thing that I've been reading is the ADP reports of the latest job figures for October. So because we've had government shutdown, the US is in its 5th week of government shutdown, which is incredible. It's the longest one ever. But anyway, so there's no BLS data. There's no Bureau of Labor Statistics. They even said they might not bring out next month's data. So it's obviously not great. We're kind of replicating China's idea of we just don't show the data. But anyway, so people relied on ADP, which is a private payroll company, for the data. It was showing only 42,000 jobs were gained in October. So it's very anemic numbers. Yeah. So
and we know that AI at some point is kicking in. Everyone's waiting with bated breath for when people start to, and we know some big companies are coming out with saying that they're freezing staff for one, or shedding and doing numbers. So I mean, it makes sense that, and I've said for a while that we could see a rising market and rising unemployment, which would be so weird because companies' margins are expanding because AI is creating so much productivity and they're able to shed staff and make more money. So there is all of these weird things going on.
Yeah, this seems weird though, because Australia isn't quite the same structure as the US, but I think the structure of of the US, 60% of their total GDP is from home consumption, right? It's personal consumption is a huge factor within their economy. So if you're losing those employment,
that's why all the fast food joints are going belly up.
Yeah, I think
Coca-Cola, the lower and mid income people are stretched.
I think I read Coca-Cola is the first time it's been a cash flow negative in over 2 decades or something like that. So yeah, it does seem to be flowing down to these numbers.
And looking at this Palantir, I mean, these things always finish with a double top of some type. This is obviously completely nuts, the pricing of it at the moment. And here we have it's opened this week above that high and is going to be closing well below it. So there's a nice little kicker as a possible start to a false break of that high. So this is, it still hasn't had a weekly sell pivot yet, but that could be what we're looking at. It's certainly looking interesting on that front. And look at Meta.
Which
I think it's worth just having a look at a few of these. I'll be very quick with this. I'm not going to bang on too much about these.
After Meta's earnings, it fell 11.2% in the overnight. And
it's continued on. The thing is, it's continued on.
Yeah.
So if we're again looking at the big picture, and I'm not going to crap on, I promise. But boy, it's had a massive run. This has been a huge run. And if we're looking at this, this is a monthly. So you can see we had in April, we had that initial sell-off. So we've got the initial wave down, the recovery, the breakout above. So this is where I say that false break. It's looking good, and then boom, the false break occurs. And just look at this. Last month was a monthly sell pivot as well. So we've got a pretty clear double top, a monthly sell pivot, and bad news on their sort of earnings coming out and everyone going, what the hell's going on with them? And I look at their AI, I don't really understand why I need it when I'm mucking around on Facebook. I don't see what they're trying to achieve with it, how good their AI is.
I mean, when Zuckerberg says, promise, trust us, we're going to bring out a great product, people look back at the metaverse and go, do you bring out great products?
The name. So this looks bad. Like this looks like a company that is going to be testing that low at some point. And that could be, then maybe that's a great buy. I don't know. But that looks pretty dodgy to me. And what else? We had even a good company that I've been watching, because now I'm looking at all these US companies. I've got all these things on my watch list. And again, watching them and saying, is it really going to break out? Or are we looking at a false break possibly coming here? And this is why I couldn't really buy it. Was because it was retesting that old high, and it's in a beautiful trend, and I think it's a company I want to own. But again, everything's so hot, it's just been constantly going up. And here we have possible big monthly sell pivot coming up. They probably had earnings out that weren't so good. So what else did we have that we wanted to look at?
Nvidia, I think.
Nvidia, even Nvidia. We want to have a good look at that. That's a good idea.
The bellwether
That's
of this
the bellwether.
entire
That's
market.
the whole world.
Yeah.
And really this week, even though there's no technical signal there yet, but that is shaping up as a possible big spike weekly sell pivot coming up. But, it's still incredibly strong. But that is actually seeing some weakness this week. That's gone from 208 down to 180. So it's the first time, when have we last seen a really big down bar like that? Not many. So that's definitely seeing a bit of selling coming into these really hot sectors, and in Australia we're seeing it as well.
Yeah, for sure. But zooming out from these individual stocks, in terms of the entire index, a 10% drawdown in a bull market isn't uncommon, right?
Yeah.
Like this could be a refresh and a reset for it to climb higher. We're not necessarily calling the end of the world.
No. It's just there's signs, like I was saying last week. It's like things are looking a little bit iffy. You've got to be a bit careful here because things aren't looking great beneath the surface. And then when you get follow through, that's why with the ASX 200, I've sort of been looking at it and a bit wary of it. And this is how markets behave, is that they suck you in when they're looking good. Because when you're at a period like this, the market's been doing nothing but go up for a year, it feels easy to buy. And you can end up, and also a lot of time passes. So you'll have that'll be 6 months of trading where it feels like it's going up and everything's good. but really there's a lot of distribution happening and the momentum's waning, and it's like, and it can be very easy to get trapped into buying lots of stuff in that environment because you feel so positive that it's so easy, and then something like this happens, bang.
Right.
And that's what we're sort of looking at again when I'm looking at the
So just for,
I'll actually
just for
change
watchers,
this.
what are we looking at the bottom here?
Okay, so I'll actually bring it up. I've got it all set up here. There we go.
There you go.
So here we go. This is the ASX 200 on a weekly, and below we've got the RSI, so the relative strength index. It's really looking at the last 14 days and looking at the average gains to the average losses and how they have performed
From
and where
open
it
to
is
close.
pricing, where it is over the time. So it's sort of looking at the momentum of where the price is right now compared to the last 14 days of price action. And I don't look at it from overbought or oversold, because I find when a market's trending, it'll stay overbought for ages. Everyone goes, oh, it's overbought. It's like, what does that even mean if it's trending up and up and up and up? So often it'll be good to use it if it's really trending and it becomes oversold and then turns up. That can sometimes be a good entry point to keep an eye on that. But what I really like RSIs for is the bearish and bullish divergence. And what that is saying, if I use an example back here, when the market's getting quite overbought, and you can see here it's sort of trending higher, this RSI getting into nearly overbought territory. And then we have this like a correction here, and then a rally that goes higher than that previous high. So the market is looking like it's breaking out, but the momentum is not really there. So there's weakness. So you get the RSI doesn't make a new high, but the market itself does make a new high and then turns down. That's the bearish divergence confirmed, saying that the RSIs aren't really looking as great. The market's looking like it's breaking out, but the momentum's not quite there. So, and that's like the indicator to say, watch out, you could be in for a bit of a sell-off.
The RSI is indicating that the open and closes are kind of showing some kind of low conviction.
There's more weakness than you think is around. So here we go. There was actually the RSI's in well overbought territory. So that's obviously just been this massive run to that peak, taking the weekly RSI to overbought, and you can see all in this chart, it's never been above overbought territory until then. So it's a really strongly overbought market. And then we have a new high created just last week, and we've got the RSIs not agreeing. And then we had the weekly sell pivot last week. So that's just that momentum waning. So we're at this point where it's like, okay, we don't know how long it'll last. Look, this could just go and retest that old high. So that'd be my target initially, would be that 8,600. So that's 200 points lower, not much lower, but still a bit of a sell-off. So how it behaves around there is what's going to be important. But it could bounce off there and we go into a beautiful rally to the end of the year. I'm fine with that. But we are at the point where, see the weekly trend on the edge of shifting down? And that was the last weekly trend shift there before a big sell-off. So we're just at the point where momentum is changing from that beautiful market where everything just goes up, up, up.
Right. So the Santa rally is at risk. It's looking a bit shaky.
Could be the Santa dumping.
Yeah, but it might not be the sky's falling. So there's danger there. Okay.
Yeah.
All right. Well, I guess we should move on to a much requested topic from some of our watchers, natural gas. Right?
Yes.
We mentioned it last week.
And it's very interesting. Yeah, I've sort of been keeping an eye on it from afar. I haven't been that interested because it's really been, like in the US, bombed out and hasn't been a very exciting market. And I've been off energy like oil. Oil still looks pretty dodgy to me. But this, AI happening, we're watching it and seeing it unfold and seeing all these bottlenecks happen with the amount of energy they need. And you saw, Musk creating the, in Tennessee, was it? And I actually watched it, the 3 big gas turbines that he had brought in across the state line and hooked up so that he could get his AI data center up and running. And I went, my God, they're going to really need a lot of gas because they can't just hook up uranium quickly. You can't just go onto someone's grid that you're going to explode their grid. I've thought, gee, this demand for gas that could be coming in this, at least in the next few years, could really take off like a rocket. And you've been saying something about the bottlenecks that are happening, right?
I mean, I'm a big proponent of renewables, but looking at the grid is going from a very centralized system where you're relying on big coal plants in Australia or big nuclear in other places, wherever it may be, those singular power plants, to a very distributed system where you've got wind over here and solar over there. That distribution means that you've got so much internal weakness within the grid because it has to have a special waveform for the power, it has to stay at a certain hertz. So you need to introduce things like grid scale batteries to try and firm that up, but we're not being able to do that fast enough. So you need gas in the interim to act as a firming agent, because if you have instability within the within the grid,
and for the AI, the gas is just their first port of call,
because the data centers need like perfectly
24/7 too,
super stable power. You can't have it kind of wavering, and that's the problem. So the grid needs stability. DC inverter systems need stability, the data centers need stability, and gas can switch on instantly, and the gas is there. So it's a really interesting kind of filler, and we'll see what happens with COP. We've got the COP meeting out at the moment, but I think that there is definitely talk around a number of different places where the inevitability of gas coming in more and more to firm up the mix seems true.
So then this morning I had a look at the Henry Hub gas price, and the Henry Hub being the sort of central hub for a lot of states' pipes coming in, gas coming in and then getting sent out to many states. So it's sort of the hub of gas distribution, and the Henry Hub gas price. It's like the spot price and the major pricing for gas around the US, pretty much. So that is looking absolutely primed to take off. It's pretty rare that you come across a beautiful chart like this, which is my sort of perfect setup. And we'll just, first of all, look at the trends, the monthly trends. I've got the monthly chart there, just looking at those monthly trends. So we've got the monthly trend shift that occurred probably around the start of this year. And just note, first of all, the collapse in the price back to, and I wanted to first show the volume. Notice the massive uptick in volume just in this last month. So that's, first of all, a massive confirmation on the run that we've just seen in the last month. And just notice on my buy and sell zones, we've got that massive low there, that huge wave. It's been a total collapse. There's my sort of buy zone area, probably around there. So it's been a lot of work done in this last couple of years, and that rounding bottom and things starting to look up. So you're looking at this first wave. So there's your bottom. Look at these wave structure first of all. One wave, two waves, and breaking the previous lowest high in the downtrend. And now here we've got the third wave. And it's always the third wave for me is the one that can go. So because you need the two waves to prove that there's some sort of trend actually even happening. Because if you haven't got that, you're like, well, is the buying coming in where you need it? Is it breaking above previous highs? So that's the first real sign of an uptrend. So we've got that sign happening. We've had the proof that it's broken above that major high there from that huge downtrend. So it's saying, right, this is a trend shift. The moving averages are saying a trend shift. We've just had a retest of the long-term moving averages. We've just had a monthly buy pivot, which was just last month. So not last month, but the month before. So that was really the buy signal, which I missed because I wasn't watching it closely enough. And so the retest and now blasting off. So this is basically saying above here, watch out. And it's taking off like a rocket. I don't think you got much time. You see what happened here. Here we go. One wave, pullback. Second wave, pullback to the retested long-term moving average. And here it is taking off. So if I was to compare these two, I'd say you're about here, right? About to test and break out and say, well, where are we going? So this could really be what we're, especially if what you're saying is true, and unless there's this massive bottleneck in getting the turbines, because apparently there's 3 years wait on the massive turbines, but the smaller turbines are around, but they're still.
We mentioned this last week about GE Vernova, one that I've been following closely, which is the big grid scale ones. Their backlog is 3 years right now. There's a couple of others in China and South Korea that are also delayed. But as you say, the smaller ones are starting to come out.
Was it Bloom Energy? What was the name of the...
Bloom, I think, is one of them. Yeah.
Bloom, is it Bloom Energy?
I'm not sure what There we go. Yeah, look at that.
So, right. So people are cottoning on to that these guys are where they need to head, right? This is pretty much an example of what's going on at the moment. But it's whether they can fulfill the contracts. And actually, my problem with gas is if they can't get the turbines, then they can't demand the gas.
Yeah.
So it's like, I guess there's all these chicken and egg things going on at the moment for whether things can get lined up. But for me, it's looking like the area to have a little stab at soon.
Absolutely. I mean, the theme there is bottlenecks, right? There's a 4-year delay within transformers. There's a 3-year delay within the gas turbines. They can't get enough of the grid connecting employers, these high level electricians. There's bottlenecks throughout that, and data centers are growing and hungry. I got one anecdote where one of the smaller utilities in the US, he said they can't manage their email system because they're getting so many emails from data center companies requesting for connections, requesting for power. So it's just absolutely bonkers.
Very interesting. All right.
Yeah.
Well,
well, I mean, we'll leave it there.
Yep.
I think that there's a lot of movements, I mean, look at this. This is absolutely incredible. But at the same time, some big falls. So watch out below.
Yeah, be careful out there.
Be careful out there. And we'll be in for another week. So
check out US Gas.
Yeah, check out US Gas. All right, thanks for watching.
See ya.